breaking news. And this one directly affects your Social Security, your SSI, and your SSDI benefits. The IRS has quietly put a new banking rule into place, and most seniors, most disabled Americans, most people who rely on monthly government payments, they have no idea it exists. We're talking about a $10,000 bank rule. And if you do not understand what this rule means for you, it could put your benefits, your bank account, and your financial security at serious risk. You need to stay right here, because in the next few minutes, I am going to break this down in plain English. No complicated tax language, no government jargon, just the truth. What this rule is, what it means for you, and exactly what you should do to protect yourself. Do not go anywhere. This is urgent, and this affects you directly. Welcome back, everyone. If you are new here, welcome. This channel exists for one reason and one reason only: to protect you, to keep you informed, to make sure that no important change, no confusing government rule, and no financial update ever catches you off guard. Every single week, we bring you the latest news on Social Security retirement benefits, SSI, SSDI, Medicare, and everything else that affects your income and your life. We translate the confusing stuff into simple, clear language that you can actually understand and use. If you have been watching us for a while, you already know we do not sugarcoat things. We tell you the truth. We tell you what you need to hear when you need to hear it. And today, what you need to hear is this: the IRS has made a move, a quiet move, one that millions of Social Security recipients do not understand, one that could create real problems if you are not aware of it. So please, if you have not already, hit that subscribe button right now. Tap the notification bell too, because updates like this one come out constantly and you cannot afford to miss them. This channel is your early warning system, and today the alarm is going off. Let's get into it. So let's start at the beginning. What exactly is this $10,000 bank rule? You may have heard the number before. Maybe a family member mentioned it. Maybe you saw something about it online. But I want to be very clear, there is a lot of confusion surrounding this rule, and that confusion is dangerous. So let's go step by step. Here is the basic fact. Under U.S. federal law, specifically the Bank Secrecy Act, banks and financial institutions are required to report certain cash transactions to the federal government. And the amount that triggers that report, $10,000. That means if you deposit $10,000 or more in cash in a single transaction, your bank is legally required to file what's called a currency transaction report, or CTR, with the Financial Crimes Enforcement Network, which is a division of the U.S. Treasury. Now, let me say something important right here. This is not new. The $10,000 reporting threshold has existed since the 1970s. What is new and what you need to understand is how the IRS is now using this information and how new proposals and enforcement changes are affecting everyday Americans, including you. Let me explain. For years, this rule was mostly used to track large criminal operations, drug money, fraud, big financial crimes. The average senior citizen depositing their Social Security check had nothing to worry about. But things have changed. In recent years, the IRS has been pushing hard to expand financial surveillance of ordinary Americans. There have been proposals, some of which came very close to passing, that would have required banks to report any account that had more than $600 in total transactions per year to the IRS. $600. That is not a criminal. That is almost every single person watching this video. That specific proposal did not fully pass in its original form, but the pressure has not gone away. And the IRS has made it very clear that it is increasing its focus on what it calls unreported income. And that includes scrutinizing bank accounts belonging to Social Security recipients. Now, here is where it gets personal for you. If you receive Social Security retirement benefits, SSI or SSDI, your monthly payment goes into your bank account. You probably also receive other money throughout the month, maybe from family, maybe a small side job, maybe a tax refund, maybe proceeds from selling something. Here's the thing the IRS is now paying close attention to. It is not just about the $10,000 threshold anymore. They are looking at patterns. They are looking at what is called structuring. Structuring is when someone breaks up large cash deposits into smaller amounts specifically to avoid that $10,000 reporting threshold. For example, imagine someone who has $12,000 in cash and they deposit $4,000 3 times over 3 different days. On the surface, none of those transactions hits the $10,000 mark, but the IRS and the bank can flag that behavior, and it can trigger an investigation. Now, I want to be very clear. I am not saying you are doing anything illegal. Most of you are not. But here is the problem. The rules are complex, and regular seniors and disabled Americans are sometimes accidentally flagged, not because they did anything wrong, but because they didn't understand how their bank transactions looked from the outside. Let me give you a real-world example. Imagine a woman. Let's call her Patricia. Patricia is 71 years old. She gets her Social Security check every month. She also helps sell some items from her late husband's estate, furniture, tools, collectibles. She receives several $100s here and there from private buyers, cash payments. Patricia deposits this cash a little at a time, a few hundred here, a few hundred there. She is not trying to hide anything. She has no idea that the IRS could look at her pattern of deposits and flag it as suspicious. One day, Patricia receives a letter from the IRS asking her to explain her bank transactions. She is terrified. She is confused. She does not have a tax attorney. And suddenly, her simple, honest life feels very complicated. That is the reality for thousands of seniors every year. Now, here is another thing you need to understand. This rule does not just affect cash. The IRS has also been pushing banks to report digital transfers, Zelle payments, PayPal transactions, cash app activity, anything that crosses certain thresholds. In fact, if you use a payment app like PayPal, Venmo, or Cash App, and you receive more than $600 in payments for goods or services, you are now supposed to receive a tax form called a 1099-K. This started being enforced more seriously in recent years, and many seniors and disabled Americans were completely blindsided by it. Think about that. You sold a few things online, a couch, some old jewelry, a few household items. You made $700 total, and suddenly you are getting a tax form in the mail, and the IRS wants to know where that money came from. For people on fixed incomes, for people who rely on SSI and SSDI, unexpected tax issues are not just stressful. They can be devastating. SSI in particular comes with strict income and resource limits. If you receive SSI, you are not allowed to have more than $2,000 in countable resources as an individual or $3,000 as a couple. If your bank account goes over that limit, even temporarily, you could lose your SSI eligibility, even if the money you deposited was completely innocent and completely legal. This is why the $10,000 bank rule and everything connected to it matters so much to our community. Let me also explain what the IRS can actually do with this information once your bank files a report. When a currency transaction report is filed, it goes into a federal database. IRS agents can access that database. They can cross-reference it with your tax return. If they see that you deposited $15,000 in cash one year, but only reported $12,000 in income, they can come asking questions. For Social Security recipients, the situation is especially sensitive because your benefits are partially or fully non-taxable, depending on your income level. But if you have other income sources, even small ones, and they push your total income above certain thresholds, more of your Social Security benefits become taxable. And if that has been happening and you haven't been reporting it correctly, that is where real trouble can start. Now, I want to be clear about something else. The government has been debating major changes to this reporting system. There have been serious discussions about lowering the reporting threshold from $10,000 down to as low as $600 for certain types of accounts. Consumer advocates and taxpayer rights groups have pushed back hard on this. The debate is ongoing. But here is the bottom line for you. Whether the threshold goes up or down, the direction the IRS is moving in is one of more surveillance, not less. More reporting, more scrutiny, more letters going out to ordinary Americans who are just trying to live their lives, and the people who are least prepared for that, seniors, disabled Americans, people on fixed incomes who don't have accountants or tax lawyers, people like the ones watching this channel. That is why you need to know about this. That is why we are here. Let's also quickly address something that causes a lot of confusion. Some people wonder, does depositing my Social Security check count toward this $10,000 rule? Here is the answer. Your Social Security direct deposit itself is an electronic transfer, not a cash deposit. It is already reported to the IRS separately. The Social Security Administration reports your benefit payments to the IRS automatically. So your regular monthly deposit is not going to trigger a currency transaction report on its own. However, and this is very important, if you also receive cash from other sources and you deposit that cash along with other funds, and the total in cash form crosses that $10,000 mark, yes, it can trigger a report. More importantly, the IRS can see the full picture of your financial life. They know what Social Security pays you. If they see deposits that don't line up with what they expect, that is when questions get asked. The key message here is this: transparency is your best protection. If your income is straightforward, your Social Security, maybe a small pension, maybe a little help from family, you generally have nothing to worry about, but you need to be informed. You need to understand these rules because ignorance is not a defense, and surprises from the IRS are never good. Let me also mention one more important thing before we move on. There is a lot of misinformation out there about this topic. Some people online claim the IRS is coming for Social Security recipients specifically. Some say the government is secretly taxing your benefits in new ways. Some of those claims are exaggerated, some are flat out false. What is true is this: the reporting infrastructure exists, it is being expanded. And if your financial situation is anything other than completely simple and straightforward, it is worth taking a closer look. It is worth being aware. That is not fear-mongering. That is good, responsible planning. And that is what this channel is all about. Okay, so now that you understand what this rule is and why it matters, let's talk about what you should actually do. I want you to take a breath because this section is not meant to scare you. It is meant to protect you. And knowledge is the most powerful tool you have. Here are the steps I recommend to every Social Security, SSI, and SSDI recipient watching this video. Step 1. Know what is coming in and what is going out. This sounds simple, but you would be surprised how many people do not have a clear picture of their monthly finances. Write it down. What comes into your bank account every month? Your Social Security payment, any pension income, any help from family members, any money from selling items, anything at all. You do not need a fancy spreadsheet. A simple notebook works perfectly. Just know your numbers. If you ever receive a letter from the IRS or your bank, you want to be able to explain every dollar that went into your account. Step 2. Understand the difference between income and gifts. This is important. If a family member sends you money to help with bills, that is generally not considered income to you. Gifts are typically not taxable to the person receiving them up to certain annual limits. But large, frequent transfers from family members can sometimes look like income if the pattern is confusing. So if a family member regularly sends you money, it helps to keep a simple record of who sent it, when, and why. Just a note in your phone or a notebook is enough. Step 3, be careful with cash. If you regularly deal in cash, whether you receive it from selling things, from side work, or from any other source, be mindful of how and when you deposit it. I am not saying do anything other than be transparent and organized. If you deposit cash, keep a record of where it came from, a simple note. Sold dining room table, $400. That is it. If you are ever asked to explain a deposit, you have an answer ready. Step 4, know your resource limits if you are on SSI. This one is critically important. If you receive SSI, your countable resources, meaning money in your bank account and other assets, must stay below $2,000 for individuals and $3,000 for couples. If you receive a lump sum of any kind, it's a tax refund, a small inheritance, proceeds from selling something, and your bank account temporarily goes over that limit, you are technically required to report that to Social Security. You have a limited time to spend down or otherwise address those resources to get back under the limit. If you do not report it and SSI finds out, you could face an overpayment, meaning SSI says you were not eligible during a certain period and wants money back. This is one of the most stressful situations our community faces, and it catches people off guard constantly. So if you are on SSI, pay close attention to your bank balance, set a reminder, check it regularly. Step 5. If you use payment apps like Zelle, Venmo, PayPal, or Cash App, keep records. Remember what I mentioned earlier about the 1099-K reporting rules. If you receive payments through these apps for goods or services, and the total goes above $600 in a year, you may receive a tax form. If you do, do not panic, but do not ignore it either. Make sure your tax return reflects that income, even if it is small. If you are not sure how to handle it, contact a free tax assistance program like the IRS's VITA program. That stands for Volunteer Income Tax Assistance, which offers free tax help to people who generally make $67,000 or less per year. It is available in most communities, and it is completely free. Step 6, open your mail, every piece of it. I know this sounds obvious, but so many people, especially when they are stressed or overwhelmed, let mail pile up. If the IRS or your bank sends you a notice, time is usually of the essence. The sooner you respond, the better your options. Ignoring a letter from the IRS does not make the problem go away. It almost always makes it worse. Step 7, do not make major financial decisions alone. If you receive a large sum of money unexpectedly, an inheritance, a lawsuit settlement, a large gift, talk to someone before you deposit it. A trusted family member, a social worker, a free legal aid attorney. Especially if you are on SSI or SSDI, a large deposit can have immediate and serious consequences for your benefits. Getting advice first can save you enormous stress and financial pain later. Step 8, stay informed. And this is the most important step of all. The rules around Social Security, SSI, SSDI, IRS reporting, and banking regulations are constantly changing. New proposals are being floated in Congress. New enforcement priorities are being set at the IRS. New rules are being written. You cannot protect what you do not understand, and you cannot understand what you do not know about. That is where we come in. Every week, we watch these developments for you. We track the bills in Congress. We monitor the IRS announcements. We follow the Social Security Administration updates. And we translate all of it into plain language that you can actually use. You should not have to hire a lawyer or an accountant just to understand your own benefits. You deserve clear, honest, straight to the point information. And that is what we are committed to giving you every single week. Let me also address one thing directly. Some of you may be feeling anxious right now, and I understand that. When you hear about the IRS and bank reporting and government surveillance, that can feel very scary, especially when your income is limited and your benefits are everything. But here is what I want you to hold on to. The vast majority of Social Security, SSI, and SSDI recipients have absolutely nothing to fear from these rules, as long as they are aware and organized. The IRS is not targeting grandma's $200 monthly Social Security check. They are not sending agents to investigate people whose only income is a federal benefit. What gets people into trouble is not malice. It is confusion. It is not knowing the rules. It is making decisions like depositing cash in odd patterns or not reporting a small side income without understanding the potential consequences. Knowledge removes confusion. And that is exactly what we are trying to give you today. Now, before I wrap up, I want to talk to you directly for just a moment. If you are watching this video, it tells me something about you. It tells me that you take your financial security seriously. It tells me that you are not willing to just sit back and hope everything works out. You are proactive. You want to understand what is happening so you can protect yourself and the people you love. That is exactly who this channel is built for. We are not here to entertain. We are not here to alarm you for no reason. We are here because the rules that govern your income, your Social Security, your SSI, your SSDI, your Medicare are complicated. They change constantly, and the people who make those rules are counting on the fact that most people will not keep up with them. We are here to make sure you keep up. Every week, we publish new videos that cover the latest updates, payment schedule changes, cost of living adjustments, new IRS rules, banking regulations, Medicare changes, SSI resource limit discussions, and everything else that touches your financial life. And we do it all in plain language. No jargon, no confusion, just clarity. So here is what I am asking you to do right now. If you have not subscribed yet, please do that right now. It takes 2 seconds. Hit that subscribe button and tap the bell so you never miss an update. This channel could be the difference between being prepared and being blindsided. And in a world where the rules keep changing, you cannot afford to be blindsided. If you found this video helpful, please share it. Share it with a parent, a sibling, a neighbor, anyone in your life who receives Social Security or government benefits, because they need to know about this too. And they are counting on people like you to help them stay informed. And if you have questions, drop them in the comments below. We read every single comment, we take your questions seriously, and we often use your questions as the inspiration for our next video. Your voice matters here. This channel is yours. It exists to serve you. And as long as you keep showing up, we will keep showing up for you. You deserve to understand the rules that govern your own money. You deserve clarity. You deserve peace of mind. And that is exactly what we are here to provide. All right, let's bring it all together. Here is what you learned today. The IRS has a long-standing rule that requires banks to report cash transactions of $10,000 or more. That rule has existed for decades, but the enforcement landscape around it and the broader financial surveillance infrastructure is changing. And it is changing in ways that directly affect people who receive Social Security, SSI, and SSDI. The key things to remember are these. Your regular Social Security direct deposit is already reported to the IRS by the SSA. That is nothing new and nothing to worry about on its own. But any additional income, cash sales, payment app transfers, family gifts that look like income, can add complexity to your financial picture. And if your account activity ever gets flagged, you want to be in a position to explain it clearly and calmly. If you are on SSI, watch your resource limits. Anytime your bank account approaches $2,000 as an individual or $3,000 as a couple, you need to take action. Report changes to Social Security promptly. Do not wait. If you use payment apps, keep records. Know the $600 threshold for 1099-K reporting. And if you receive a tax form, address it. Do not ignore it. And above all, stay informed. The rules are always changing. Your ability to navigate them depends entirely on your awareness of them. This is not a story about fear. This is a story about empowerment. You are not powerless in this system. You are not at the mercy of rules you do not understand, because now you do understand them. And that changes everything. You came here today for information, and you are leaving with something more valuable than that. You are leaving with clarity, with a plan, with peace of mind. That is what we do here every single week. Thank you for watching. Thank you for trusting us with your time and your attention. Please take care of yourself. Please share this video with anyone who needs it, and we will see you in the next one.